What are estimated tax payments?
Estimated tax payments are periodic amounts you pay directly to the IRS if you have income not subject to withholding, such as self-employment. They help cover income tax, Social Security, and Medicare taxes throughout the year. Making these payments prevents large tax bills at filing time and helps you avoid penalties for underpayment.
Who needs to pay estimated taxes?
If you're self-employed, work as a freelancer, contractor, or run a small business, you likely need to pay estimated taxes. Generally, if you expect to owe at least $1,000 in tax after subtracting your withholdings and credits, the IRS requires you to make these payments quarterly.
How to calculate estimated taxes?
Start by estimating your expected annual income, deductions, and credits. Use IRS Form 1040-ES to help calculate the quarterly payment amount. Divide your estimated tax evenly over 4 payments. If your income varies a lot, recalculate each quarter to avoid underpaying or overpaying.
How to make payments?
You can make estimated tax payments online, by phone, or by mail. The IRS Direct Pay website and the Electronic Federal Tax Payment System, EFTPS, are fast and secure options. Payments are typically due in April, June, September, and January. Mark these dates on your calendar to stay on track.
How to avoid penalties?
To avoid IRS penalties, be sure to pay at least 90% of your current year's tax liability or 100% of last year's tax. Keep detailed records of all payments and income. If you're unsure, consulting a tax professional can help ensure you're calculating and submitting your estimated payments correctly.